One day, when I was really bored, I decided to look up if there are any ETFs that are leveraged more than 3 times. We all know and love TQQQ, but could we go further? Yes we could. I just searched up 5x leveraged NASDAQ and found an ETF from leverage shares called 5QQQ. Since its inception from December of 2021, it is down 91.5%, which at the time of scripting is mid-May 2023. Okay, let me say that again, down 91.5%. That's kind of a big deal. For comparison, the market was down 12%, so way more than 5x beta. You're going to be hearing a lot of Qs in this video, so I'll just call TQQQ triple Q, 5QQQ quint Q, and regular QQQ is just Q. Putting that sad fact aside, if you click on this video, you probably know what a leveraged ETF is, and specifically triple Q, a 3 times leveraged version of QQQ, which is the most popular leveraged ETF. Here's a video dedicated to it if you don't really understand what it is. The investing community's consensus on triple Q is quite bipolar. You fall into one of 2 camps. You either think that holding it for more than a day is the 8th deadly sin, or swear by holding it until they die, and absolutely go into the moon. Both of these viewpoints, in my opinion, are kinda stupid. I went over this debate more in my dedicated video about triple Q, but I'll summarize it here. The thing at the center of this is the scary sounding volatility decay. Let's say the underlying is going sideways and goes down 10% and up 10% 4 times. The underlying would be down 4%. You would expect the 2 times leveraged version to be down 8%, 3 times to be down 12%, and so on. But the math tells a different story. So while the underlying would be down 4%, 1.5x would be down 9%, 2x would be down 15%, 3x would be down 32%, and 5x would be down a whopping 68%. However, this could also be a benefit. This is why triple Q went up 20,000% from 2010 to 2021, while Q only went up 700%. While what I just told you might make it seem like triple Q is a balanced investment, the thing is that losses wipe away everything after a gain. It doesn't take a 90% gain to come back from a 90% loss, it takes a 1000% gain. This means that triple Q takes forever to recover after a crash. For instance, if triple Q existed in 1999 and you invested in it then, you would have just broke even in 2021, despite the 2010s being the biggest bull run in history. The effects of extra leverage can be shown. If you just set it to 3.5x leverage from 3x, the crash is much more significant. Okay, now back to quint Q. I feel confident, even if the next decade is a raging bull market, which it probably won't be, that this thing will go to 0 faster than you can say liquidation. Here's a backtest of quint Q. Oh, sorry, didn't even survive for a year and was already down 90% after 5 months. Okay, then let's skip the .com crash. Oh, whoops. It lost 99.9% of its value in less than a year and went to 0 again. Okay, let's backtest it after the 2008 crash. So the only conditions for a decade after is literally the best bull market in all of history. Holy macaroni. I think I just had an aneurysm. A 99.63% drawdown in 2022. I think what this proves is that backtests are just a tool to justify your BS strategy. Yeah, next time I happen to buy into a 12-year raging bull market, I will turn to Bill Hwang and leverage the hell out of it. Basically, if you're that one guy who A, bought at the literal best time possible after 2 crashes, B, ensured that the next decade would be a raging bull market, and C, sold at the very top exactly before the market crashed, you win. Unfortunately, this will never happen. In every other scenario, 99% of the time, you will lose everything. Luckily, 5QQQ is only trading on the LSE, the British Stock Exchange, so not too many degenerates will have their hand losing money with this. I'm not even gonna lie, this is a great alternative to buying short-term options. If you're betting the market will be bullish over the next couple of days, I would definitely recommend 5QQQ to get your gambling fix, since it is less risky than options since it's not affected by external factors such as theta decay and implied volatility and whatnot. I'm not recommending gambling with your hard-earned Wendy's paychecks, but I know for a fact that you guys will do it anyway, so you may as well do it in a slightly less degenerative way. Basically for now, most of you probably don't even have access to this fund, but if something similar does list in the US markets, please do not hold it long term. Most people aren't even comfortable holding a 100% stock position, as they consider it too risky. What makes you think that you would be able to stomach a 500% stocks position? Leverage is a beast that no one can tame, and that includes you, so be safe out there. Yeah, no, I'm not even trying to be funny. Be careful with leverage, because you can either nuke your entire portfolio or become a trillionaire. And one of those possibilities seems a lot more likely than the other. That's it for today's video. I hope this video is informative or at least entertaining. Please like, comment, and subscribe to boost this video in the cool YouTube algorithm. There's some free stocks for you in the description and pinned comment, and as always, I wish you all green portfolios and I'll see you in the next one.